Welcome to ForexTV.com. It's Wednesday, December 5th. I'm Remy Hickey for New York Forex Market Buzz. In New York afternoon trade as of 1:40 p.m. Eastern Time, Euro-dollar is trading at 146.65 and dollar-yen is currently at 110.51. Meanwhile, sterling-dollar is trading at 2.0284. And looking at today's economic data front in the U.S., the ADP reports show private sector employment rose by 189,000 in November. And ISM non-manufacturing held above 50 in November, but fell more than expected to 54.1. Meanwhile, Q3 productivity in the non-farm business sector rose at a 6.3% annual pace, while unit labor costs fell 2% on an annual basis. Joining me this afternoon is Brian Dolan, Chief Currency Strategist at Forex.com. Good afternoon, Brian.
Hi, good afternoon, Remy.
Thanks for joining us today.
My pleasure, as always.
Well, first, let's start out with today's slew of U.S. data. The ADP report blew expectations and came in stronger than expected, and we saw the Wall Street advance at the opening bell with the dollar index rising from late yesterday. So first, let's take a look at this morning's fundamentals. What picture does the data paint for the Fed rate outlook?
Certainly. The key thing to keep in mind, I think, about today's data is that it's all mostly backward-looking and pretty largely outdated. Even the ADP employment report for November, employment is typically a lagging indicator in terms of the overall economic outlook. So typically you'll see the unemployment rate continue to increase even after an economy has ended a recession and is starting to improve. And you'll see jobs continuing to be added even as an economy has topped out and begins to move lower, potentially into recession. So today's, on top of that, the ADP is still viewed with a bit of a fair amount of skepticism in terms of its predictive capabilities for the non-farm payroll. However, having said that, the economists that have revised their expectations for Friday's non-farm payroll number have uniformly shifted their expectations higher, and the average revised estimate as of today looks to be about plus 125,000 for the jobs report on Friday. What does that mean, though, for the outlook? It makes the Fed's rate decision extremely awkward, given this current data that is potentially more positive. But the overwhelming outlook is still for the risks of potentially falling into a recession and certainly much slower growth ahead. So there's a conflict between the incoming current and potentially backward-looking data and the broader outlook going forward. So at the minimum, I think what this is going to do is it's going to alter the Fed's thinking and remove some of the urgency. And we saw this with the market shifting expectations from a 50 basis point rate cut at next week's meeting to now odds favoring only a 25 basis point rate cut. I think given the balance of risks, that's what the Fed is likely to come out with.
Well, Brian, now that we've covered the Fed rate outlook, let's move on to rate decisions coming out tomorrow morning. Yesterday, we got a surprise rate cut from the BOC, and expectations that the BOE will ease tomorrow have been rising. So what's your take on the rate announcements coming out tomorrow morning?
Certainly, we have the Bank of England and the ECB. I'm expecting the Bank of England to cut rates by 25 basis points. That's roughly, the market is evenly divided roughly between steady rates from the Bank of England and a 25 basis point rate cut. I would note, however, that the Bank of England is facing a situation that's not dissimilar to what the Fed was facing back in August and September. We still have the credit crunch affecting the credit markets most acutely in the UK. We have a housing bubble in the UK. We have the highest indebtedness of individuals in the UK of all the major G7 countries, and so the potential for a sharper downturn in the UK economy, which we've seen, which is perhaps predicted by some of the data that we got today, suggests that there is the potential for the Bank of England to get out in front with a similarly larger than expected 50 basis point rate cut, similar to what the Fed did back in September 18th. So certainly the downside for the British pound is highlighted in this regard. And I think ultimately we're on the way to a relatively rapid move down into the 195 to 198 area in the pound. For the the European Central Bank, the expectation there, and I would agree with this, is for a steady rate decision. Inflationary pressures have picked up. Eurozone growth is still relatively solid, though it has slowed, and the expectations are that it's going to continue to slow. But the key takeaway from the ECB's announcement, or I should say press conference, is going to be the guidance that ECB President Trichet offers. And there, I think he's likely to emphasize that the current spike in inflationary readings is still viewed to be temporary, and that the growth outlook continues to soften. And that is going to, I think, lead to a recalculation in the market, where there is still a small majority that is still expecting higher ECB interest rates sometime in the first or second quarter of 2008. So I think those expectations are going to be priced out, and we're looking at a further decline in the euro against the U.S. dollar.
Okay, Brian, now that you've given us your take on the fundamentals, let's talk about how this translates into price action in the coming session. In today's session, we saw the U.S. dollar again against the euro, sterling, and yen. So if we could focus on technicals for euro dollar, the pair is currently at 146.66 and down from the 147.60 level seen late yesterday. So if you could give us your levels of support and resistance ahead of tomorrow's session.
Sure. The euro is essentially sitting at the edge of a cliff, the cliff being the up channel that has guided the euro-dollar rate higher since about the middle of August. That level comes in, and we've tested it today at 146.50 to 60 area. And so once we get below that, we're looking at, I think, a much more significant shift lower in the euro as well. The immediate next support level, it comes in around 145.20. Which is a low from back in early November. On the upside, there is the potential, of course, always for the euro to continue to keep moving higher if the trend line holds. The upside trigger for further gains is up around the highs that we saw yesterday, around the 147.80-90 area. We'll need to get above that in order, and that would actually constitute a break of a bull flag and indicate a resumption of the euro's move higher. But overall, I'm not expecting that to take place, and I'm focusing on the downside and looking at the British pound as leading the way lower for Europe against the U.S.
Okay, now let's move on to dollar yen. The pair has pulled back in afternoon trade, especially on the heels of news from Moody's that it is set to issue reviews both on SIVs and bond insurers. Moody's also mentioned that a capital shortfall at MBIA may be likely. So going into tomorrow's session, what's your forecast for the yen?
I think it's going to be, the yen is going to be stronger. Dollar yen is going to be much lower. I think we'll be back testing down into the high 108, low 109 area before very long. The MBIA news, it's not just confined to MBIA. They also cited the second and the fourth largest mortgage insurers, AMBAC, and the other name escapes me. So what we're looking at here is a very significant further deterioration in the entire credit market outlook. Ultimately, the knock-on effect of these, what Moody's is saying is that they may need to downgrade AMBAC and MBIA and a few others. And what that does is it also results in lower credit downgrades to the securities, the bonds that they have guaranteed. And so that means then lower credit ratings for another whole host of bond fixed income securities issued by municipalities and governments. So this is now on top of the whole subprime toxic mortgage debt that is still sitting on banks and institutions' balance sheets. So we're looking at potentially, the figure I saw was on the order of $400 to $500 billion worth of further bond securities being downgraded. So right now the equity market is, I don't think, properly appreciating what is happening here, but I think investors elsewhere around the world are going to look at this news and say the U.S. fixed income, U.S. equities, these are all now in serious trouble. So with that, I expect, and we've seen this already in the initial reaction to the MBIA news, a sharp jump in the yen. So I'm looking for that move to more or less continue. And the risk is if we would see below the lows of about 109 figure to 25 area, and that would open up then potential back down to the lows that we saw earlier, late in November, around the 107.20 to 50 area.
Okay, Brian, and last but not least, if we could briefly touch on the high yielders of sterling and Aussie dollar, what levels do you forecast for the currencies against the dollar and the yen?
Yeah, the Aussies had a very interesting reaction to the RBA's decision, and I think they have, for the time being, misinterpreted, the market has misinterpreted what the RBA was indicating with its guidance. The expectation still is that the RBA is going to need to tighten sometime in the first quarter. So in that sense, the 86.50 low that we saw overnight, which matched a low back in the about the 20th of November, is the key level to the downside. And while that level holds, I look for the Australian dollar to stage a recovery. In its favor, we still have very strong regional growth in Asia, which benefits Australia disproportionately. They also have less of the credit market turmoil that is being experienced in the U.S. and European capital markets. And then they also have the interest rate, both the current high interest rate and expectations for further rate hikes to go. So I'm looking for the Australian dollar to return, not back to the highs that we saw in early November, but something on the order of the 90 to 91 cent area.
Okay, Brian, as always, thank you very much for your insight and analysis.
All right, thank you very much, Remy.
Have a good afternoon.
All right, you too.
That wraps it up for Forex Market Buzz with Brian Dolan, Chief Currency Strategist at Forex.com. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.